Happy Friday, traders. This is Fawad Razakzada, market analyst for City Index. Today is the 17th of May, 2024. So it's finally happened. Silver has broken the key $30 level, as I've been banging on about it for several days now, weeks even. It comes on the back of a big breakout in copper prices that we've seen of late. This is copper. Gold, as you may recall, hit record highs in April. And the precious metal is still on course to hit another record high, I think. But the focus today is on silver because it's taken out $30, which had been a major level in the past. So if you go to the monthly time frame, you can see that prior to the breakout above 30, we had seen this bullish break from this long-term consolidation pattern above $26, which had been a key area of resistance in the past. Once that happened last month, we saw silver prices pull back, as you can see by the wick of the monthly candle. And I was expecting silver to find strong support from the breakout area of around 26. And lo and behold, as you can see, that's precisely what's happened here. Silver is now up a good 15% on the month. So this is a significant break. And where do we go from here? So let me just bring this a bit down. So 30 was resistance in the last few years, back in August of 2020, in 2021, and we got very close to that level last month before pulling back. So now that we've broken above this area, the key question is, can we start heading towards the all-time high that was hit in April of 2011 at 49.76, just below the $50 level. We're miles away from there. So the first question is, can the breakout hold above the $30? And we'll just take it from one level to the next. But the underlying trend is clearly bullish. So on the daily time frame, we saw silver prices break out of the bull flag pattern. Let me just remove the Fibonacci extension levels for now. We broke out of this bull flag pattern early in this month, leading to another push higher, with the metal going on to break interim resistance around $28 to $29 area on the back of the CPI report that was released on Wednesday, which caused the US dollar to weaken across the board. Yesterday, on Thursday, we saw silver consolidate its recent gains, and today the trend has resumed. So the key area of support that now needs to hold is this area right here. Let me just move this up. This shaded region, which is going to be very important to watch moving forward, because right here we have the high of 2021. This high. We have the psychologically important $30 level, which has been a strong resistance level in the past. We also have the high from April at 29.80. So ideally, you don't want silver to go back below this support area now for it to maintain its bullish bias. But if it does, then that could pave the way for a deep correction, possibly towards 28.75-ish or even lower. So watch today's low closely at 29.46, and we would maintain a short-term bullish bias on silver for as long as that low holds now. So today, can it close above this area? And next week, will it remain above that area is a key question. If and when it goes back below today's earlier low at 29.46, I think that would be a bearish development. So if you're bullish on silver, that's not something you'd want to see. Let's go and look at gold chart now. And gold has also broken out in recent times from this continuation pattern to the upside, making higher highs and higher lows again. Right now it's testing potential resistance at 2,400, an area where it couldn't close above when it was setting record highs in April. So today it's attempting to post its first ever close above that level. Remember, it hasn't closed above the area, right? So if it can manage to close around current levels, I think that would be bullish. From here, the next upside objective is obviously the April high, which was also a record high at 2,431. Subsequent targets above that area, well, you have to use things like Fibonacci extension levels to come up with objective targets, because we don't have any prior reference points past the April high. So drawing the Fib extensions from the April high to the low that was hit early in May. So we've gone past the 61.8% Fibonacci retracement of that swing. The 78.6% is being tested right now. The 100% is the high, and above that we'll be talking about the extension levels of this swing. So the 127.2 comes in at 2,473, and the 161.8 comes in at 2,526. Those are some of my long-term objectives for gold. In the FX space, the Aussie is my favorite currency pair right now, because we have just broken above this area of resistance this week. This area had been strong resistance throughout this year, but recently we've seen strong bullish price action, and following the US data this week, which were mostly weaker than expected, we saw the Aussie dollar break through and close above this area of resistance. So earlier today, the Aussie was weaker, testing that area at 66.50-ish, and it's bounced back from there, which is continuing to show bullish price action. And if we can close above this area, this will maintain the recently established bullish bias, which could pave the way for a potential move up all the way to the top of the range and the December high near 69. So that could be the next major target for the Aussie dollar for as long as this area of support holds. Speaking of commodity dollars, the Canadian dollar is looking very interesting. We are testing this bullish trend line that has been in place since December. Given the weakness in US dollar, I wouldn't be surprised if this bullish trend breaks down. So recently the dollar CAD has been declining inside this bearish channel, and more recently it has broken below this area of support between 136.33 to 136.47, call that 136.50 area. This level had been support, and following Wednesday's breakdown, we have tested it a couple of times, and so far, as you can see by the wicks of these candles, price wants to hold below. So for as long as this area now holds as resistance, we could well see some further downside follow through. 136 is key support, because this level was the base of the breakout in early April, as you can see over here. And if that level gives way, which I think might be the case given how the dollar is behaving against other currencies, then we could well see a drop to the 200-day moving average, which comes in at 135.70-ish area. Thereafter, we have this low here that was hit on 9th of April. And if that low breaks, then I think any bullish hopes for this currency pair would have to end there, right? Because we'll have created our first lower low at that point. Now, for more analysis and trade ideas, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Have a good weekend.